Good morning. Let's get some charts up here. So, for those of you in the green room, I titled this morning's post on YouTube, Wall Street Bets Criminals. You see what's going on CNBC with the established Wall Street people yakking away and not liking what's going on. And we all saw what happened at Robinhood, which personally I would never have an account there as a professional. But I was speaking with Dan last night. We are having a little discussion, and we've been around for a long time. Dan's pretty old. I'm kind of getting there, but we've been in here for a while, and it reminded me of the Sos Bandit days. If you remember back in the early '90s, and there was, after the crash in 1987, this system came out called Small Order Execution System, and people learned how to use it. And all of a sudden, market makers were now becoming victims of retail traders who had to take orders, and people were using the SOS system, and they were coined SOS bandits because they were eating the market maker's lunch. And so now here we have a new time era in the market where the internet creates social media groups where the retail guys get together and formulate a trading plan with the information that they're using as to who's short XYZ. Can we move this particular stock? Maybe they don't believe it should be short, whatever. It's a fair playing field. They're making decisions on their trading, same as back then in the early '90s. And then what happened from there was technology evolved, and people learned different things. Different routes came about. So new things occur in the markets. They always do. Our job is to learn to adjust. And these professionals, which get access to order flow and many other things that we don't, I'll tell you, they have advantages that we don't, and that's what I'm saying. So you know what? I think they should just shut their mouths and deal with it. So let's see what the markets are doing. All right. So yesterday there was a decent attempt to come off of support. So looking at SPX here, we look to the left as we always do. There was a little tickle underneath that came back up, and now we get, a move up toward resistance. It made it a pretty good move up into the resistance, and this is the power of what we call the void. It got through that little minor area we talked about yesterday over here. We'll get to the futures. And then once it was able to get through it, and when you see a wide range bar starting up, that's power. And so it got to the next level where sellers showed up. And this was right where we shorted the S&Ps yesterday afternoon on the 5-minute chart as the hourly reached resistance and started to roll over. And we rode that down into close to the close. It was a nice little trade. So here, SPX today, and looking at open interest and premium, I think you got to get down here. There's premium down there. So at a minimum below, well, I'd say I was looking was 36.50. There's premium, and there's a big open interest down there. Just looking back at it, 36. Yeah, there's like 21,000 open interest in the puts. And so there's some juice there. So I would go a little bit below that. I mean, as we look at the charts and we look at ranges and say, what's the probability of coming down there? Well, if everybody started hitting the bid, most did, we could potentially come down there. I think it's unlikely, but that's what we always think is it likely to reach there when we think about a credit spread? And I think no. We've got a huge open interest at 36.50, which will tend to act like support. We've got a pivot here. We've got a pivot here. pretty, relatively large distance down. But anyway, you're in an area where under even some abnormal conditions, meaning that would be a monster move in a day, buyers would show up there. So you want to get closer to it to get more premium. You think the 50 is going to hold, the 50 MA on the daily chart? Um, you know, that's a personal choice. You got some support there. You'll get more premium, but you'll take obviously a lot more heat, and probability of getting to the 50 on a bearish day, I would say, is within the realm of possibilities. Wouldn't be that unusual, right, to get a continuation pattern down to that point. So up above, there's really not much premium up there, interestingly, because I was thinking, let's get above, 38.50, 38.60 on the call side. So look there. It was a pretty decent open interest at 38.50, but as you get above that, there's really not much premium up there. So if the market should possibly rally, you might want to take a look at that. But just on the put side, getting that far away, I think it's a pretty good grade. Yeah. All right. So let's see where the futures are at. So just trading inside of yesterday's range, running in place, retested, the prior support there, as we always do. So it's kind of like, now that it's created this new support, we just drag our little green area up there. And so that's what will be leaned on today, as it was earlier. Now we'll see. Now that this got a void, it certainly is possible that it could rally all the way up there. But my little blue line here is the little congestion to the left. Let's just call it a minor resistance area, which is where they're stalled right now and kind of getting pretty whippy. So as prices dipped back down there, they were the bids and they ripped it right back up, and then they backed away from here. So you got traders just bouncing back and forth between relatively tight support and resistance levels. So bit of indecision. Looking at the bigger picture, you have an inside bar, indecision there, and we'll just see where this goes. And as far as a credit spread, scenario, things way down there, indecision, flip-flopping back and forth here, seems like a pretty good odds trade to me, for the premium that's down there. Let's take a look at the cues. RTX potential short watch. We can take a look at it. Same story there, bouncing back and forth. Same story. Major resistance up there. And we got that little cluster right there. And we can just drag our green thing up here. And we've got a little trading range going on there. I hope all of you that are new to the room, and those of you who know, I like to repeat this as much as possible. Those on YouTube, you see how simple it is. Just looking to the left with all the hocus pocus, not on the charts where you're taking things like this thing, and I can do it if it even works. I start drawing all kinds of lines with things in between there, and going out and getting this stuff and doing that, and then just making up lines in your own little place. The technical analysis on Wall Street, what's taught in most places, is really far-fetched, ridiculous. But I started there myself looking at that kind of stuff. Anyway, you get away from it and all of a sudden the light bulbs start going on. YM. Cracked. Sentiment's still bad. Got a break of the uptrend, right? And a double top here. It's in the lower half of the wide range bar. And this is something I spoke about a couple of weeks ago, was that, look, we're looking for some kind of corrective price action to occur. Why? Because our internals sentiment was up here. It's been up there, and I've been talking about the deteriorating breadth, right, since December, being a warning sign. So sentiment is still up here, which says, hey, there's enough gas in the tank based on this to drive prices lower. Now, breadth is down here, so that's not in alignment, so we don't get any signal from that. And they have to be lined up. So if the markets were to continue to fall over the next several weeks, and then all of a sudden these option traders start buying puts, which would make sense, eventually the sentiment would come down to this lower band here, and then we would get a buy signal. We're not there yet. So it really doesn't tell us much other than what I've just said. So we'll have to just see, how that plays out. But the uptrend has been violated on the daily time frame, and uptrends and downtrends, the break of those trends begin in smaller time frames. And then we just wait to see if they're actually going to evolve into higher time frames. So, wide range bar breaking to the downside. It's a power bar. It's created a void. Prices went up yesterday. We'll see what they do today. Did I get a response? More. I have not seen your email. If I'm saying this right, Caro, please try your email. Oh, that email. Okay, I did respond to you, but I will respond again. Okay, so Dow trend is broken. And what has been the leader lately? We had the breakout failure. It's pulled back to the support to the left, and it's just jiggling around here. We got a bottoming tail bar. So we got the beginnings of a trading range. And again, we'll just see where things end up today. You get a red bar on the weekly time frame, get red bars. They happen. It doesn't mean it's the end of the trend. We will just see how this evolves. And right now, this has created, as you all know, uncertainty in the markets. The craziness in some of the stocks, the way they move, the short covering, the indices breaking down. So things are going to get kind of whippy. And we'll see how far this goes. Bonds, right, going back down. This is what the chart said that they should do. Right. We've talked about this now for a month, right? We got 4 bars here, wide range bar, factory work. Do the bodies stay in the lower half or the lower third? It's exactly what it's doing. So Fed says they're going to keep buying. Really? Are they lying? Or are they waiting for it to get down here to start buying? If they were buying as much as they said, well, if they are buying, right, who's dumping? That's bigger than the Fed. So we've got bond prices going down, interest rates going up, and so that's short term. Maybe markets don't like that, but that will continue to push this yield curve higher, which helps put a floor long term under the markets. Oil moving up, that's or consolidating in a bull flag. That's a good sign for the markets. And this has been a concern as far as the oil stocks, which took a lead at the end of last year. And so, they came up off of the lows here. They're up near resistance. And if oil starts to break down, that's obviously a negative for oil stocks. And so they've pulled back to the 50 where buyers should begin to show up. And we'll just see if it begins to hold here. This could be a place to buy them, right? Can I look at DXY? I'm not sure I get quotes on that, but I can look at UUP. I can look at the euro. John? I've spoken about the dollar and the fact that it broke its downtrend here. And if this is kind of one of those parts of the intermarket analysis that we keep an eye on, and it's been in a downtrend for a while. And so now that it's broken at least the downtrend on the daily, it opens up the door to this possibly moving up. And if it does begin to move up, we're going to see probably, I know historically, some pressure on crude oil, and that's going to put some pressure on those energy stocks. And I don't think the dollar moving up at this point in time is what the broader markets want to see. So keep an eye on that. And whatever the Fed is saying, see that this is going to drop again. Well, that is supportive of what they're saying. Um, the short-term interest rates. So I've got an alert on this, maybe on my other system anyway. I don't watch this day to day. I put an alert, and you know what? If this starts moving up, something's up, so to speak. Not just that. Um, you start seeing those very short-term interest rates start perking higher. Why? If the Fed's going to keep interest rates near zero, so I keep an eye on that as well. And gold, it's making the turn. This is what we were talking about earlier in the week. I said, keep an eye on gold here. I know it had that nasty, nasty drop. I was saying maybe we can get this, get turned around where it's repairing the damage. And here's the nasty. And now, it hits the support, has a little shakeout and to make a higher low. And it's coming back up here where call it a rounding bottom, call it a head and shoulders bottom, call it whatever you want. It's building a level of support here after that drop, and what I call repairing the damage, which is, we'll be setting up for this to go back up again. And silver, someone said yesterday, the Wall Street Bets guys were talking about this, and but hey, technically, it makes sense. It's up at resistance now, probably stalls. And the other bearish thing for the market was the fact that the transports rolled over, but hey, looks to the left there, all right? It's sitting on support. So markets are at short-term critical areas where they've declined to. And as always, we monitor trends in multiple time frames and the patterns and intermarket analysis and our market internals and see where the markets are at and where they may go. And so considering where they're at right now, we'll see if they hold critical support levels like this and all that, and we'll update it day to day as we go on. To you, Dan.
All right, good morning, thanks. Happy Zero DTE Day. Love Fridays. It looks like the Robinhood short squeezing, encore is on today. I really thought it'd be a short-term pause with yesterday's craziness. But now a lot of things gapping up big. We have 3 open positions in the weekly options trader, which is unusually light, and they're all doing fine. We have Facebook call spread for next week. And then expiring today is Tilray put spread and NVIDIA call spread. We have 13 open positions in the advisory. 12 of them are long. So our only problem child is this stupid GME short call we're in. With the intent was going to be to roll it. I just sent out a very detailed Telegram note on it about either rolling it, taking assignment, but then selling puts into the close, which is a covered put. Volatility is still monstrous. I see Emmanuel asking about zero DTE. Emmanuel, I mean, the answer is I'll trade anything if I go through my checklist. But the problem right now is I don't know what my bias is. I mean, it's a gap here with a price void up and down. And secondly, I'm guessing the even the firms that are restricting new trades in this, or at least new bearish trades, I guess, are that they should allow a spread as opposed to naked. I don't know. Got to find out. Just put in a dummy alert and a way out of the money dollar sign and see if you get a reject button. But yeah, I remember yesterday I was trying to sell the 570s for $54 and they would not, it was the furthest out of the money, so I couldn't test a spread. But they wouldn't let me put on any new naked ones. Um, yeah, I got a ton of things to look at here. Yeah, Bitcoin is rocking, so those stocks are rocking. Let's see, Thomas here. ADT, there's absolutely no pattern right now, but as long as it holds the upper 50%, it's a watch. SWPR is no symbol. I think you mean SPWR, spur. It's extended. There's no pattern. It's at resistance in the 15. Nothing there for me. All right, so silver, yeah, silver's up, and yeah, somebody said yesterday that the Robinhood can this could be their next target. AG was on their list yesterday. And I did, Irfan. I did post it. Yeah, I'll do it again. But yeah, I did. There you go. Let's see. So yeah, the Shark Tank Kevin was on today, and I agreed with him. He says let the market work. We got new social tools. Let them do what they want. And I said that yesterday. And I said, provided they aren't violating SEC laws. So I said, the SEC, that's their job. Let them look into it. But I don't mind, you know, the what these guys are doing, provided it's not illegal. We just have to be, if this is going to be the new normal, we got to be aware of it, which means maybe, never again shorting a naked call, which I rarely do anyway. But the only times that I would consider naked is if there are no out of the money further ones, number one, or number two, that trying to get a spread on the spreads on the out of the money option are too darn illiquid, so it's messing up my credit. But also we got to see if something is a candidate for a short squeeze, which means what? Which means low float and high short interest, like that GME at the time was only valued at $10 billion with 140% short float. So that's a key candidate. Apple is Microsoft, $2 trillion company. That ain't the footprint to cause a short squeeze. So those don't bother me, or even the SPY. But I saw on some CNBC guy's list about some restricted stocks. Tootsie Roll was on the list. So if we get if we get a compelling pattern where we're going through master trader strategies and we get a checklist and we're like, yep, you're good to go. And then we're riding the train as a G just said. Absolutely. Then I'm happy to ride the train. But we got to get them early enough. So maybe Gustavo, you can be our what are they called? Wall Street Bets. You can be our moderator, or anybody. If you all, whoever's monitoring that, yeah, give me a heads up. Give me a heads up. If the pattern matches, absolutely we'll do it. Trivago was another one I saw on the list. What's Trivago? I had it here. TV, whatever. I'll get to it. TRVG, I thought. Yeah, there's Trivago. Now look, look at this 15-minute breakout. So that was very tradable. And then this is a climactic sell setup. We just go into trail mode, and there you have it. There was a day trade riding the Reddit train. Nokia was on there. Look at that. Look at that rocket ship. It's actually setting up here on the 15 for a day trade. 15-minute high. 15-minute high. You got a big price void right there. That's a day trade watch. That's a day trade watch. Yeah, I saw the Rocket Man CEO on TV today. Does it have earnings or anything? Is this another? I mean, when you get burned, and it's also coupled with reality. Whenever I see this footprint of craziness, my first question, until I get desensitized, is going to be: Is this a Reddit rip? AAL yesterday. Hey, Gustavo, you know our friend. Oh, really? Okay, Robin. Our friend Chris, the pilot. He likes to dabble in the market too. This got a Robin Hood or Reddit boost yesterday on earnings. I sent this picture to Chris pre-market. I said, dude, you might want to sell some at $30. Guess what? I saw him at the local saloon yesterday. Did he? Nope. Nope. And you know what he had the audacity to tell me? He says, yeah, but then I would have short-term gains. And so I need to hold it longer so I get long-term gains. All right. That's good thinking. I'd rather pay a higher percent tax on 100% bigger gain, but that's another story. Yeah, this XRT has been whipping around with a lot of these high beta things. Like GME is I think it's in there. Some other guy texted me an article. Yeah, exactly. GME and Macy's was a short squeeze. DDS. Look at that. That is right there is the footprint of a short squeeze. So we got to pay more attention to these guys, and let's combine our knowledge with what's going on in the market right now. I'm not participating in their nonsense, but if we can be the beneficiary of it, why not? Yeah, RAD. Yep, RAD was one on the list. Yep. BBBY, that nugget thing or whatever, Nugent, I forget the symbol. Well, Big John, but even though it's the largest component, it depends how they calculate the weighting. But yeah, is it market cap or is it? Yeah, I don't know. We can talk about it later. I don't want to take time right now. All right, AG, no. Yeah, but 20 billion doesn't seem like a lot to me. VFC, that was on my list yesterday. Yeah. I posted this as a 1, 2, 3. Yeah, Greg, this was